Welcome to Part 3 of our Retirement Benefits Training for Employers. Part 3 covers the requirements and processes for reporting retirement information to PEBA. The topics we will be covering in this presentation include both the employer and employee contributions, monthly and quarterly reporting processes, how earning service credit works, and finally, submitting supplemental information to PEBA. PEBA's Member Account Services has representatives assigned to each employer to assist with questions on the processes of monthly deposits and quarterly payroll reports. Your Member Account Service representative is also available to help you with any service credit issues and contract length questions, as well as helping with completing and submitting supplemental reports. First, let's discuss contributions. Both employers and members are required to contribute to the system in which they are enrolled, SCRS, PORS, and state ORP. Employers will contribute based on members' earnable compensation, and members will contribute a portion of their earnable compensation. Contribution rates for employers are subject to change each July 1, the beginning of the fiscal year. Member contributions are currently capped and are not subject to change. Employers are required to remit contributions on compensation for SCRS and PORS members, state ORP participants, and return to work SCRS and PORS retirees. Employers also remit an additional contribution if they elect to offer incidental death benefit coverage. An additional employer contribution is also required for accidental death program coverage under PORS. State agencies, public higher education institutions, and public school districts are required to pay an insurance surcharge to share in the cost of retiree insurance coverage under the state health plan. Please note that the employer contributions are not placed in the member accounts. This slide shows the fiscal year 2021 employer contribution rates effective for all wages paid on and after July 1, 2020. When the employer contribution rate increases, you will apply the increased rate based on the date wages are paid. As stated previously, employee contributions are currently capped at 9% for SCRS and state ORP, and at 9.75% for PORS. Let's look at employee contributions. Employee contributions are tax deferred and made from the employee's gross salary. Retirement contributions are credited to the member's account. In retirement, monthly payments will continue regardless of whether the account has been exhausted. Any employee contributions that are not exhausted through the payment of monthly retirement benefits to the member and any survivorship beneficiaries are payable as a lump sum death benefit. Now let's look at retirees who return to covered employment. Retired members who return to covered employment are required to contribute as if they were active. But it is important to note that return to work retirees do not earn additional service credit. Contributions will be determined by the system from which the member retired. For example, if a member retired under PORS and returns to covered employment under SCRS, contributions will be withheld at the PORS rate. If the retiree is retired under both SCRS and PORS, then contributions will be remitted based on his position. For additional information, please refer to the Working Retiree Contributions Training document in EES. Per IRS regulations, there is a limit on earned wages that are subject to contributions. This regulation applies to employees who became members after December 31, 1995. Anyone hired prior to that date is exempt. The limit for 2020 is $285,000. Any compensation earned over $285,000 cannot be reported to PEBA or have retirement contributions withheld. Members who earn more than the limit fall into a special reporting category so that they will earn service credit. Please refer to the reporting section of the Contract Link 20 in the Covered Employer Procedures Manual for instructions. Now let's talk about wages. Contributions are required on gross salary or wages earned. This is before any taxes are withheld and prior to any other deductions. Any wages an employee receives while on paid leave, such as sick and annual leave, are subject to contributions. Contributions must also be withheld on overtime pay. However, for SCRS, the overtime must be employer mandated to be subject to contributions. For Class 2 members only, contributions are also deductible for up to and including 45 days of termination pay for unused annual or general leave. For termination pay, the rules differ depending on the class of the employee. For Class 2 members, any termination pay of unused leave in excess of 45 days is not subject to retirement contributions. For Class 3 members, no termination pay for unused annual or general leave in any amount is subject to contributions withholding. It is important to reiterate that employers do not withhold contributions on any Class 3 members' leave. Some other types of payments that are not subject to contributions are special payments, such as one-time bonus and retirement incentives. Also, do not withhold contributions on any lump sum payments for unused sick leave or any long-term disability benefits. Next, let's review the monthly and quarterly reporting. The monthly and quarterly reporting process is how PEBA receives the data to update members' accounts. Unless indicated, employers who report their payrolls through the Comptroller General's payroll system are excluded from this process. SCEES uploads the information to PEBA directly. Employers are required to submit all member and contribution data via employer reporting in EES. Monthly and quarterly deposit forms and remittance, as well as quarterly payroll data, are uploaded through EES. The due dates for the required monthly and quarterly information are listed under the Employer Reporting tab in EES. The due date is the date by which PEBA must actually receive the information, not the postmark date. The due date calendar, Form 1341, is also available online. For some employers, copies of the due date calendar, along with green envelopes, are mailed each August for remitting paper checks and deposit forms. Employers must remit employer and member contributions monthly to PEBA using deposit forms. The deposit form can be printed or downloaded. The type of deposit form must be submitted for the correct month or quarter. For the first 2 months in a quarter, you will submit the monthly deposit that contains the payroll information for the month listed on the forms. For the last month of the quarter, you will submit payroll information for the entire quarter. For more details, please view the EES deposit tutorial online. There are a few ways to remit your deposit to PEBA. You may submit the payment electronically, remit the deposit via wire transfer, ACH debit, or electronic payment by emailing the deposit to serviceaccounting@peba.sc.gov. To set up these types of payments, please contact Tiffany Johnson, Retirement Cash Receipts Manager, at 803-737-6849. You may also mail your paper check and deposit form to PEBA. Review the status of your deposit in EES to confirm the receipt of the payment. If the deposit is not received within 10 days after the due date, PEBA will notify the employer. Late deposits are charged interest based on the adjusted prime rate. There is no grace period for the interest assessment. The employer is required by law to remit state ORP contributions to the service providers in accordance with IRS established guidelines. This applies to the participant contributions plus the 5% employer contribution to the participant's account. The employer must provide details needed by the service providers to process the payment. Each employer is responsible for monitoring each payroll cycle to ensure contributions are remitted. For more information, visit the website listed on this slide. Now let's discuss the process for submitting the quarterly payroll data. In the last month of the quarter, you must submit the quarterly payroll data along with the quarterly deposit form. The payroll data may be either uploaded via text file or manually entered in EES. Please refer to the EESER or ESER manual in EES for more details. If the quarterly payroll data is not received within 10 days after the due date, PEBA will notify the employer to submit the report in EES. It is important to note that the member accounts cannot be updated without the employer payroll data. Each record on the payroll data is processed through a number of edits, which may result in an error. PEBA will release the errors for review once the payroll data and the deposit remittance are received and match. If the payroll data does not match the enrollment record on file with PEBA, a transaction error will show in EES. Employers need to view the errors under Employer Transaction Error List and Employer Reporting in EES as soon as possible to begin correcting errors. Errors must be corrected in a timely manner to post member contributions and service credit to member accounts. The Employer Transaction Error List can be sorted by any of the column headings. Review the error description and tips for how to resolve the error. Let's look at two examples of a quarterly payroll data errors. First, PEBA needs updated employment information. This error means the payroll data record does not match the enrollment records on file with PEBA. You need to select the enrollment link to initiate a retirement plan enrollment to correct this error. Another example is if the employee's name does not match PEBA's files. You need to verify the employee's name and submit name change documentation to PEBA if necessary. Finally, for employers on the Comptroller General's payroll system, deposits are remitted each pay period by the CG's office. Quarterly payroll data is also submitted by the CG's office. As a SKI's employer, you are responsible for reviewing the quarterly payroll data errors in EES and addressing any errors or working with the CG's office to resolve. Now let's go over service credit. Information provided by employers through the quarterly payroll data is an important part of the member's retirement account. PEBA relies on this information to calculate a member's service credit. Service credit is awarded based on the reported contract length, months paid, and compensation. State ORP participants and return to work retirees do not earn service credit. Compensation is tied directly to service credit. If a member earns the monthly compensation threshold per month and is actively employed for the entire month, he will receive 1 month of service credit. Currently, the monthly compensation threshold is $580 per month and is based on the federal minimum wage. If compensation is less than the threshold, he will receive a portion of the month's service credit based on his total compensation and months paid. The other component to establish service credit is contract length. The contract length is the number of months per fiscal year, July through June, that a member is paid compensation. Year-round employment is a contract length 12, meaning 12 months employed, 12 months paid. If a member is paid for only a portion of the fiscal year, the contract length is the number of months he is paid. Some school districts and public higher education institutions are paid over a 9, 10, or 11-month period rather than 12 months. These members will receive pay only for 9, 10, or 11 months of the year instead of 12, but will earn 1 year of service based on their contract. Contract lengths are typically set during the first quarter of the fiscal year, in September. Changing a member's reported contract length during the fiscal year may create service credit issues. For example, the employer reports a member with a 10-month contract length. The member will earn 1/10 of a year of service for each month paid. If the contract length changes to 11 or 12 months, the member will be short service credit for the year. For guidance in determining contract lengths, refer to the contract length chart in the Covered Employer Procedures Manual. Finally, let's review supplements. If there is an error already posted to a member service contribution, you may be able to correct it using a supplemental contribution report or Form 1227. Follow the instructions on the form as to how to complete. Only one fiscal year of corrections can be made per form. To view prior year fiscal year employer rates, refer to the Form 1340. For specific types of leave without pay, military and workers' compensation, the member may wish to continue contributions. These situations should be reported via a supplemental service report or Form 1224. The contributions will be based on the compensation that the member would have earned if he was able to perform his job duties. To ensure his service stays current, the employer should submit the form and contributions monthly. State agencies, higher education institutions, public school districts, and county governments are authorized by state law to remit contributions during certain employee furloughs. To submit furlough contributions, the employer will remit both employer and employee contributions for SCRS, PRS, and state ORP. Contributions are based on the salary immediately prior to the furlough period. Furlough contributions are not required for return to work retirees. You can submit a furlough supplement via Upload Furlough Supplement Data in EES.